said it's bad, and we won't know where we are in the cycle, but we can certainly say that it is a contraction going on. It's unsustainable. Home prices, and I'll just talk about the home prices. We just saw the report came out, still up 1.9% year over year. And home sales are down. I mean, it's just a standstill. There's a mismatch between expectations. Sellers, they want their higher price, and of course, it's in their minds. And buyers want to pay less because look at the mortgage rates. I mean, like you said, higher rates cause asset prices to come down, but we haven't been seeing that because not only is the demand is lower, but the supply, there isn't a supply. So tell us what you are doing in this market. If you can share with us what your plans are, how are you handling this, and how bad do you think this really is? We have the headlines, and they're pretty scary. How is it? Is it really that? It's really worse?
I don't know if the headlines are that scary. I think the headlines are stories, meaning they talk about specific situations. For example, Brookfield's giving back a office building there, or this guy's being foreclosed on here. But that's individual cases. There's a great saying that I use over and over and over again, and I don't know where it comes from, so whoever came up with it, please forgive me. Statistics never lie, but liars use statistics. If you want to be told what to do, then you better trust the person telling it to you, because they could spin whatever they want into whatever web that they want to spin it into. The way to see what's going on is to look to motivations. What are they getting out of this? Are they taking the risk alongside me? And what are the bets that they're taking? Are they telling me what I don't want to hear, or only what I do want to hear? And that's really where we stand right now, to be very, very, very blunt. We have a lot of information, but this information is yesterday's news. As a matter of fact, news you'll see today probably happened 3 weeks ago, and then a reporter got wind of it because it finally was a filing. You're behind, and it's only one anecdote. I could tell you I'm working on, I believe, probably 11 restructuring engagements right now, and none of that stuff has hit the market. And some of that stuff is owned by serious real estate players. But it hasn't hit the market because I don't disclose these things. Of those, I'd say probably 30%, the lender doesn't even have the information yet, because I prepare before I talk to the lender. I don't tell them, well, I might have an issue. I'm not sure to what extent it's an issue. I don't know how to quantify it, but theoretically, if I had an issue, would you work with me? And what would you do in that case? And how do we go about it? That's a lot of borrowers like doing. It doesn't work out that way. It doesn't happen. The lender wants to know what the problem is, what the ask is, and we'll decide if we give it to you or not. And we'll decide what our remedies are and take it from there. So the answer is, in order to assess a good market, you need to learn it. You need to understand it. You need to understand the reason for it. In order to assess a bad market, you better be a really good expert, not only on the current market, not only the previous high market and what led to that point, the changes between the two, but also what's happened in the past in other bad markets.